It's now time for our ETF Spotlight, taking a look at Cathie Wood's ARK Innovation Fund, about flat on the year after quite a bit of volatility in the interim, to say the least. A new piece from Barron's highlighting that investors have pulled a net $2.7 billion from the funds since the end of June. This, of course, as Wood dipped back into the Chinese names this week through her fintech ETF. Take a listen to what she told Tech Check a week ago.
We have never said that Chinese names are uninvestable. What we have said is because of the social engineering, it seems, or re-engineering that's taking place in China, that the valuations associated with these companies are damaged, and we don't think they're going to go up anytime soon.
So remember, guys, this comes after she basically pared back all Chinese exposure just last month, now getting back into names like JD.com, taking 59,000 shares in that name, as well as Tencent Holdings, 235,000 shares in Tencent. Now, noteworthy, this is through her fintech ETF. Right. This is not through kind of their flagship innovation fund, but interesting nonetheless, especially in light of those comments made just last week.
Yeah, although it was a good trade. I mean, the stocks have actually been, despite what you're looking at today, generally quite strong so far this week. A bit of a rebound. In part, Pinduoduo had very strong earnings. Tencent. I mean, this continues to be an overall concern with the Chinese government. When it will end, the data privacy efforts most recently are scaring a lot of investors as well. And there, it's not just the names you're looking at there. It's also ByteDance, which, of course, is a private company with a potentially enormous market value, held by many hedge funds, enormous position at General Atlantic, of course, as well. One has to wonder what that's meant for the valuation of that company, even though, again, it's private, but if it were in the public markets, or at least how it's valued. Leslie, so we're kind of keeping an eye on those, because remember, a lot of hedge funds now also own privates.
That's a good point.
And they're liquid. A lot more, or a lot less liquid, certainly, than those names, and they're getting hit also.
Yeah, and we saw some data today, kind of speaking of hedge funds, it's interesting to see the types of investors that are kind of wading in these waters and are brave enough to really get back into the Chinese names, because a third of hedge funds held long exposure to Chinese ADRs at the end of the second quarter. And so they really suffered dramatically from the sell-off in Chinese names that really began in earnest shortly after the quarter ended. Now we see evidence of more retail investors getting into these names. It'll be interesting to see if the hedge funds are as well. But clearly, ARK Innovation, ARK Fintech, huge retail investors are huge fans of Cathie Wood. So it is kind of interesting to see the mirroring effect take place here.
Yeah, even as the SEC's warnings get more vocal, and Didi's reportedly shelved some expansion plans in the UK. So there's a lot of cross currents regarding the Chinese names.